And joining me now with more is Douglas Cohen, Managing Director at Fiduciary Trust International. Douglas, it's great to have you on the show this morning. We see the S&P 500 inching closer to correction territory. Walk us through what matters in this market right now.
Sure, Kristen. It's good to be with you again. You just had the opening bell. We could probably be here until the closing bell if I recounted just all the twists and turns of last week. But I think the key point is that, there's a reason that one of the global indices that measures global uncertainty is at the highest level that we've ever seen. It's the policy uncertainty that has come largely from the White House, tariffs, and a few other things that have really weighed on the market. And, it's at a time where we were coming off 2 terrific years. The U.S. market was really inflated. And so I think we were vulnerable to something kind of like we've had over the last couple of weeks. And, looking forward, we'll have to see what the next Truth Social post is, what the next statement is that comes from the White House, because that's really what the market's focused on, with tariffs certainly at the center of that.
The S&P 500, Douglas, opening down 7.5% from its record high. We should note, oftentimes in economic cycles, even one-year cycles, right, in the market, that many market participants on our show have said that a correction is healthy, especially after some of the gains that we've seen over the course of this 2-year-plus bull market. How should investors respond to the headlines and the action that they're consuming?
Sure. So, and I think, the way you phrase the question is important. Investors, not traders. Investors should certainly be mindful of what's going on and where their portfolios have done extremely well over the last couple of years. Probably an opportunity to rebalance and just make sure that you're not much more aggressive than you really want to be over the long term. But over long periods of time, kind of to the point of your question, these things usually, there are such things as healthy corrections. And while it certainly never feels it at the time, this is probably one of those instances. So panic is rarely a good strategy at the margin. Playing a little bit of defense, I think, can be helpful. And maybe the last thing I would say, again, to underscore that some of this is quote unquote normal. I'm not a biblical scholar, but there's a saying in there that the last shall be first and the first shall be last. And that's really been the story of 2025 in the market so far. Because everything that worked in the past, especially the last couple of years, whether it's growth stocks, the Magnificent Seven in particular, the U.S. dollar, just the U.S. markets, those have all reversed. It's overseas markets that are doing better. It's value stocks that are doing better. It's tech that's been weak. It's healthcare that has been so weak in the past couple of years, doing much better. So I think tweaking portfolios at the margin, getting back towards strategic targets for your asset allocation, that's what's important right now.
Yeah. Let's talk through the economic picture, because I think one thing, at least for traders, right, definitely Americans too, but traders that they're trying to digest is not just more clarity when it comes to trade policy, but also understanding the state of this economy. Is stagflation on the horizon? Are we in a recession? Regardless, we know that tens of thousands of jobs have been lost with these DOGE federal government cuts. How does that impact growth?
Yeah, so look, I think we are in the market's fear, and I think this really crystallized a lot last week, is that we are in somewhat of a growth slowdown. Some of that, I think, is related to the policy uncertainty. DOGE and the related efforts at the margin, probably a part of that. So I do think we are going to have to kind of get through this period. Now, again, some of the policy uncertainty could end very quickly, right? We know that President Trump can be volatile in terms of his views. They can change very quickly. So I think that's important to watch. But I also think you have to look at, inflation and employment trends. And one of the things that may give the market a little bit of support here is the notion that the Fed probably is going to move a little bit more towards an easing posture than was perceived. Up until very recently. And we may not get the Trump put right away. We could get the Fed put fairly quickly.
Douglas Cohen, great to get your take as we see the markets now open for this week on Monday. Doug is Managing Director at Fiduciary Trust International.